Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. Today's video, we are going to make a strategy basis the data. So we will combine data analysis today, data analysis, then creating a strategy, and then backtesting the strategy. Okay, this is going to be interesting, and we will do it live. I have not done anything, so I will want to show you how to do it live. So we will take our favorite index, which is Nifty, which we usually trade, but you can do this whether on Nifty or even on Bank Nifty. The process will remain the same. So what we are going to do is first we will go to Nifty NSE site and download historical data. And how do we do it? So we go to this Nifty indices reports historical data. Okay, here you will be able to select equity, fixed income, multi-asset. So I'm going to select Nifty 50 here. Okay, and then I am going to choose. I can actually take the data for last 2 to 3 years, but usually what happens is whenever there is a pattern forming in the market, usually that changes and that doesn't tend to work in the future. So when you look at people who are saying that backtesting for 3 years, 4 years, 5 years, it may not be relevant. What is relevant is the last 1 year data. So we will look at 1 year data because it may have worked 2 years back, 3 years back, but is it working this year? Because a lot of things have changed this year and a lot of algos have capture the market, and the way the market moving is very different from how it was moving last 2-3 years. So we have to consider the data for last 1 year period. So I will select the data from 1st Feb 2022 till date, which is like 25th Feb 2023. So I will submit. Let's see what data comes up. So we have got this data now, which is date, open, high, low, close. So we are trying to make a simple strategy, not too complicated. This can be used by any office going guy on a daily basis. It doesn't take much of a time. So that kind of strategy we are going to build. So what we do now with this data is we click on CSV format and it starts getting downloaded. So till the time it gets downloaded, let me just check. Yeah, it's already downloaded now. So you can see this data, Nifty 50. Okay, so this is the data we have got. So now what we need to do is we need to pick up the range of high minus low. So we will call it high minus low range. And with a simple formula, everybody can do it, high minus low. Okay, so this is the range in which Nifty has been moving. Okay, so this is the range on a daily basis, day to day, every week. This is the range of a Nifty. This is the range. Okay, simple formula, high and low. So what I'll do is I'll just copy paste values. Now what we need to see is this is the range for 25th February, 23rd February, 26th February, 20 February. So I want to analyze on which day of the week what are the ranges forming. So I want to see the range basis. What is the range on weekdays? Is it changing or is it same? So let's that we will come to know once we analyze. So what we do is we try to bring in the day in this. Okay, so watch how do we keep the day. So what we do is simple text formula minus so text this date and DDD. So I'll get the day, the week. which day of the week, what is the range, is what we want to analyze. So I am going to just remove the formula, paste the values. So values are done now. Now the next step is to create a pivot table. Okay, I am using all shortcuts, so you can just use the plain pivot table chart the way you can put. So you can just select it, click on data, then you can click on pivot table, create pivot table. So let me show it to you. Okay, now let's go to the data and try to analyze. So you can use this option to create pivot table. Since I start using the shortcuts, it's a little difficult for me to go and find where is it. So that's what happens when you get used to it. So what I'll do is I'll just put day here and I will put high low range. So when you put it like this, you will get sum of the range. What you need to do is just change the settings and just make it an average. So this is going to tell us what is the average range of Nifty on Monday, on Tuesday, on Wednesdays, on Thursdays, and on Fridays. So mostly you can see it is in the same 202 point range. So what is the range we have got for last 1 year? Range equal to 202 points on Nifty for last 1 year data, which means Nifty moves in 200 point range every day, up or down. So with this data, what we are going to do is we will see and try to understand what we can do in options. So what we do is we go to our option chain and try to see, for example, with this data, we can assume that when market opens on Monday, the ATM straddle, whatever it will be 700, 500 or 550, but the range what we are getting is about 200 points. Okay, which is from, this is 100, this is 200. Okay, so this is one spot and this is 100, this is 200, so this is another spot. So we have to sell these two easy. Okay, this is 17,500, assuming that market is going to stay here. So this is minus 300, this is plus 200, plus 200 minus 200, 500 minus 200, 500, 17,300, 17,500 plus 200 is 17,700. So can we build a strategy basis this which we can work on a daily basis? The answer is, let's check it out. So now what we are going to use is that we are going to use backtesting tool. Talk more. Okay. So what we'll do is, so what we are doing here is that we are taking at the money. So this is calls, this is put. So we say at the money call plus 200 means 17,500 plus 200, 17,700, and put will be minus 200. So that's where we made the mistake. So this is put minus 200 or 200 plus. Now we have square of one leg, move SL to cost. Stop loss is about 30%. Stop loss is about 30%. Timing will be 9:45. 3. Okay, so let's check this on a back test. I hope this time it gives us the correct data. You always have to buy credits to use this platform. You have to pay some 700 rupees to it. get some 30-40 credits. So let's first check the data if we are getting it right. At the money put 115 minus 81, 89 minus 46, 18 minus 23, 11 minus 10. So this was on which day? This is on Monday. Monday 150, 151, 122. 1. So Mondays usually premiums are high, but as you can see when it is coming down 80, 57, by the time it comes to Thursday it becomes 12, 13. Okay, so now the data is looking fine and we can check the accuracy of this data. Is it a good strategy or a bad strategy? 1 lakh margin, overall profit 11%, 53% win day, loss day 47%, average monthly profit 1000, win to lose ratio 1:1. This is good. This is 1:2, which is really good. Then let's go down. Expectancy MDD ratio not that great. It should be somewhere around 10. Expectancy should be around 0.25 or 0.3. Stop loss hits 0, stop loss is 25 days, 1 stop loss 136 days, 2 stop loss it is 85 days, which is okay. But I want to see the drawdown days. Drawdown days in this is about 49 days. Maximum drawdown is quite low because this is just a one lot trade. So let's check. Mondays we are profitable, Tuesdays we are profitable, Wednesdays we are profitable, Thursdays we are profitable, Fridays we are in loss 22 and 23. So Friday why we are lost? Because the premiums don't decay, and this is basically premium decay strategy. So what is the return we have made in 2022? It is 14% return, still better than what bank can give you. 2023 we are at -2% because it has not given any return so far, because it's going both the directions and it is very volatile. So if you look at the curve, that means you are in upside only but using the strategy, but there are many drawdowns, so drawdown period will be difficult for you to handle. Now, is there anything we can do to change the winning percentage in this? We can try some options. Okay, we will try to export this data and then try another variation. What we can do is we can remove the move SL to cost thing and just try to retest how it appears. Okay, if you see, notice this, the win ratio has gone up. Now you are winning 63% of the time. Profit has gone up 14% from 11 to 14. This has dropped. Max profit versus max loss. Your loss is higher. Profit on win days is also less. Recovery days, it has reduced from 49 days to 31 days. Drawdown also has reduced from 7,000 to this thing. So these are good, but expectancy MDT ratio not that great as such. %, but January has given you a consistency. So overall, if you practice this strategy on a bigger capital, you're not going to lose anything. You're only going to gain higher return than your bank FD. So if you follow a systematic rule, at least you'll make about 12% with this kind of strategy, even without having a stop loss trailing method. It's a very simple strategy. Even then your capital should grow. See the cumulative curve. it is growing on. The capital has grown over time. So I think even with this logic also you can simply try to. But now let's try another scenario where we are saying, okay, let's not put any stop loss and see what happens. Okay, let's not put any, if people, market makers are hitting stop losses, let's not put stop loss and see how the strategy works. So what we do is we remove the stop losses, time and everything remains same, then we back. Before backtest, let's export the old strategy. It's done. So now we run this strategy without stop loss. The risk of having a strategy without stop loss is that whatever money you make in many days can get lost in one day if the move comes big. So let's see how are the numbers looking. Profit has gone up to 26%. That's a very good sign. The winning rate has gone big. It's become 73% now. Average monthly profit is 2%. Profit to loss has doubled. So loss increased. The losing trades are giving you 1100, but winning trades are giving you 571, but your winning percentage is higher. Max profit, max loss. Max loss 10,000 you see, so 3 days you will take to recover your loss. So usually your drawdown period will be higher. So it is 10,000 and 55 days. Return to MDD is also okay types, not that great as such. So now let's see how is it performing on different days. Monday good profit, Tuesday good profit, Wednesday, Thursday super profit, Friday you're getting an average loss of 1,000 rupees, which is okay. But you see the kind of return on investment is like 21% and 23 is about 5%. So 26% in 2 years you could have made by using this simple strategy. And how is the curve looking? The curve is looking fantastic. Only these sharp drops are because of your the days when you have trending days and market shoots up. That day the sold calls or puts will go really high, so that days will have a bigger loss. So that is the one which is, but since we know the percentage of days where it has gone beyond 300 or more than 300 plus, that's very less. So we can see, let's check the days where it has given the maximum loss. This is the day 7,000 rupees where you have sold at about 30, it closed about 199. Okay, it's a huge jump. So this is 34, it became 27. Okay, not much of a drop. That is the reason you have a higher loss here, lesser gain here. Okay, I sell it at 30 rupees, and if I don't have a stop loss, it is going up to 200 rupees. Okay, so can we make this further better? What we can do is we can actually try this tweak. Let's see. So traders, after multiple iterations, what is working for us? I have done a little more detailed analysis and tried to put in more logic to this. So as you can see, the data from where we have got, I have also created a range for the data. Like we want to see how many days the Nifty range was less than 100, how many days the Nifty range was greater than 500. That means the days when the Nifty moved more than 5 points, 500 points, or dropped more than 500 points. So 100 to 200 we have 56% of the times, 211 to 300 we have 24% of the times, 300 to 500 we have 11% of the times. So if you say what is our safe zone, we cannot go 200, we can go up to 300. So 300 is actually giving you 80% chance of winning. And the only problem is that you're going to lose on this 11% days, and these 11% days can take the profit of all this 80%. So now what I have done is I have done the same thing at the money put minus 300, at the money call plus 300, and we have put in a stop loss of 50% on each of the leg, so that we give a little bit of room for the retracements to happen. Usually price breakout happens like this. Let me just draw and show. Price breakout happens like this, and then it retraces back, and then it moves up. So when you're having a stop loss, the stop loss will hit here, and then immediately if you move the other side to trailing stop loss, this will also get hit here. So to avoid this, what we have to give is we have to give a little more room. At the same time, we save over risk. So like that, I have put in a 50% stop loss on both the legs, and I am saying square of one leg if the one stop loss is hit, and then move SL to cost. The same condition, but here I have 50% buffer, so that I remain in the trade and I don't book the loss on both sides and exit. So with that, if you see, a good news is that we will look at the numbers here. 1 lakh margin, profit is about 22% on 1 lakh, and your max profit is about 3747, and max loss is this, and biggest change is 57%. This is a good thing, 393 versus 300. Okay, and the biggest change is here, your drawdown has drastically decreased, and your drawdown days maximum are 19 days, and you can recover your money in 4 days. This is the best thing, and you can see that 11 MDD ratio is a very fantastic number, and expectancy is about 0.32. So winning days 6 days, losing days 6 days, but in winning days you're winning more, losing days you're losing less. 84 days 0 stop loss hit, 113 days most one stop loss hit, and 49 days both stop loss hit, which is less. Now looking at the number, now on Mondays profit, Tuesdays, Wednesdays, Thursdays, Fridays also profitable in 2022, but not started in 2023. Okay, then if you stop trading on Fridays, maybe you'll be able to have a better number. What is the return on investment in 2022? 52% you have returned. In 23 we haven't got any return, so you can stop trading on Fridays and see what will be the result. I think we can see that here. If we just say that we don't want Friday data, just remove Friday. Okay, our profit is still 19-20%, so let's not remove, let it be there. So here you're making better return, and the same conditions you have to apply on a daily basis, and see the equity curve is also pretty nice, and there is not much of a drawdown anywhere. If you want to see the drawdown, how it should look, drawdown is looking like this. It's still in this range. Okay, so this is a better strategy for you. You can export it and use it. And what will happen is, if you want to multiply your money and have greater money, let's do it with the 10 lots. You can easily scale up. Let's check. I have only 2 credits left, but let's check what happens if I do with 10 lots. Let's quickly export it. On 10 lakhs, you're making 22% profit. Average win is greater. Everything remains same, only the values have gone up, and you can see the win percentage also 22%. So on average, on a monthly, you're making about 80,000, 12,000, 60,000, 25,000, 14,000. So you can run your house with this strategy. But only thing is that you have to stick to the rules. This you can do without not created, and you can save the algo cost. Simple, right? Isn't it a great strategy for you to start off? If you don't know much about options and all, just follow these rules and you will be able to end up profitable by doing this thing. And you have to choose 300 point away from this, like 300 point from 17,500 minus 300 is 7,300. This is 17,800. So 13 you have to sell, and this is 17,200. So 21 and 13 both you have to sell with 50% stop losses. If you want to increase your accuracy more, you can do it with 100% also. That can also be possible. You want to see 100% how it looks, I can just utilize my last credit and see how it looks with 100% stop loss. Why not? Let's try it out. Okay, so let's see how is it. Results are not that great, my friends. So it is only giving you 14% returns of this. Expectancy and everything has dropped because I think you need to see how much you have to give in when you are giving it back. So 50% was an apt number for you. Here you are actually losing a lot in that scenario. So let's not use it. Maybe you can use the earlier version, which is at the money, call and put away with 50% SL, so that one leg gets squared off, another leg moves to cost. So that's it, guys. That's it for this week. I hope you have enjoyed this video, and hope you are able to learn something new with these strategies which we have learned today. Thank you so much for watching, and have a great weekend.